Good day guys, and welcome back to my channel. It's week 26, Wednesday. We're going to do a midweek analysis of the 11 currency pairs that I trade. We're going to have a quick run through them, see where we are and what we plan to do for the rest of the week with them. And at the end of that analysis, I'm going to show you how I trade my favorite indicator, which is the Ichimoku Kinkō Hyō, also known as the Ichimoku indicator. So let's do the analysis and then get to how I trade that indicator. So without further ado, let's get to the charts. So we are on the Euro GBP. We jump straight up to the weekly. Now let's have a look at the weekly. Let's just move the chart a little bit to the right to have a look at, see as much of the left as we can and see where we are. Okay, we can see at the 0.902, that's a good resistance level. So we know now, looking at the RSI, we got a pending divergence there. Here we see our checking volatility down past the 0 mark. So this is telling me that I need to then jump into lower time frames to just see where we are, see how we're moving. So here we are on the daily chart, and we can see, looking to the right, the 0.902 is kind of in the cloud as well, which is, I'm not surprised it's there. I'm expecting it to be there. I mean, we're kind of consolidated between from 18th of June, 27th of May, 5th of May. If you look left, you see last year 29th of August. I mean, we are up, testing a resistance level there. How I'm going to approach this pair is just kind of waiting. I know that time is kind of creeping on us in where we need to be in regards to leaving the EU. So I'm just going to keep tabs on this and leave it as it is. I'm expecting the Euro to rally if as the closer we get to December and there is nothing inside of a deal. So I'm expecting the pound to get weaker. So looking at it on the daily, we're kind of stuck in the cloud at the moment. I wouldn't bother going to lower time frames because I know that I just need to wait on this pair. So I would just jump back up to the weekly, have another stroll the chart to the right to have as much view of the left as possible, and wait. I'm not looking to short. I know you can pull up. We just pull up the equidistant price channel on this and see where we are. Yeah, I mean, looking at this, it's range bound from the 22nd of May all the way to date, and this is on the weekly chart. I mean, I wouldn't definitely be shorting this to range trade. I wouldn't short at 0.9. I'm hoping to get to 0.8. I'm just gonna wait for a rally because I can see this popping above the 0.91 and heading on higher highs, seeing what the fundamentals are. So that's a trade that could fit into some traders strategy in terms of seeing an opportunity to short this currency pair, but it doesn't fit within my strategy. If I do go in, I'm going to go in for the long haul. I'm not going to jump in on this short position to take advantage of the range movements in here. So what we're going to do now is just leave it on the weekly, leave our equidistant price channel in there, and we'll move on to our next pair, which is the GBP USD. GBP USD straight to the weekly. Let's slide the chart to the right, the far right, and see where we are. So again, we can see that we've tested lows here, 26th of January early this year. We tested lows of 1.14, and then we quickly rally up to a resistance level, which we are currently was consolidated at the 1.24 mark. We look quickly at our RSI, see where we are. We got divergence from late October all the way to May. We got this divergence here, but nothing's happening with price action. That's basically telling us that the market is kind of just stagnated at this point. That's basically telling us that we're kind of just consolidated here, and there's nothing going on at the moment. We got the US elections coming up and Britain leaving the EU. a deadline also creeping up. I'm not going to expect anything to happen, anytime soon with this pair that fits into my trading strategy. So I'm just going to drop down quickly to a lower time frame. Let's jump down to daily to have a closer look. We can see on a daily, move the chart to the far right. We are above the cloud. We're trading above the cloud. So this looks like it's moving to the upside, but again, as we know where we are with the fundamentals, we know that there's not a confirmation 100%. Well, there's not a high percentage confirmation that this is going to be a long position at the moment, because just nothing is happening. So how I will approach this is I will jump up again to the weekly and just look left and see see where we are in terms of the next possible resistance level, which is 1.33, 1.34. So I will be expecting this currency pair to go up to the 1.3, 1.334 before I then look at it a bit more detailed in terms of what I need to do then. Because how I see this going is we are going to have a weaker pound, and the dollar sometimes function as a safe haven currency, not as strong as the yen. But in the situation like where we are heading into, I will expect a weaker position for the pound, and I will be looking at the dollar going up as high as 0.45. So I just need to wait now, seeing the divergence on the weekly to the upside. I just need to wait now to see what happens when we do get up to 1.3, 1.31. Once we close above the cloud on the weekly, I will then look down into lower time frames to go into this to look into putting a long position on this, expecting a weaker pound. So with that in mind, we will leave it on the weekly. There's nothing happening on lower time frames for me to be able to go dive deeper into. So we'll leave on the weekly and move on to our next pair, which is the Euro USD. So on the Euro USD, onto the weekly, we will scroll the chart again to the far right to just have a look and see, get a bigger picture on the weekly to see where we are. And we can see, just looking at the weekly, we're kind of range bound as well, and we are at a major resistance level at the 0.12, 0.13 level. So just here at this level. And if you look left, January 2016 all the way back to March 2015, it's kind of a range bound trade. So I mean, just looking at this and having to make a technical decision, I'll be expecting to short this pair at the moment and hopefully move on to lows, short at 0.12 and expect to take profit at 0.10. But we know that that's not the case at the moment with the fundamentals in mind. So I will jump down to a lower time frame on the daily and have a closer look at this pair. So scroll the chart to the right and we can see divergence here and divergence here, but we have a flag here which normally will tell you that this will break up to the upside. So again, I will expect an upside here, a break to the upside to 0.1415, and then I'll be looking to short, seeing where we are on the weekly. So if we go back to the weekly, we see this retracement up here to the 0.1314, and then we'll be expecting the short a move to the downside. We'll be expecting the dollar to put on its safe haven suit and create a flow, a movement to the downside. I'll be looking to short this pair, but looking at the daily, I will be expecting a retracement up to the 1.14. for me to be able to go into this and short it. We've got divergence on our Chiken here. We know that it's, we know that it's heading towards the downside, but how price action works, and there will be a retracement to satisfy this flag. I've looked at this pair, for a long period of time, so I do kind of have a rough idea on how it functions. So with that in mind, we'll be looking to short this pair, jump back up to the weekly chart, stroll to the right, and leave it on the weekly, and move on to our next currency pair, which is the USD Yen. On the USD Yen, I have got a position open on the yen, the USD Yen. So if we just jump quickly up to the weekly, we see the trend is to the downside. We look straight to our RSI, we see divergence, we see where the Chiken is. We're at lows here. We'll move the chart to the right a little bit to have a look at the left, and we can see where we are. So we see the nines, 1 2 3 4 5 6 7 8 9 candlestick to the moving to the low. So that gives us a view of where the path is. Now we know that we're heading into uncertain territory with the US-China trades still up in the air. There hasn't been any change to where we are or improvements in that deal. We know that the US elections is coming as well, another certainty that there's a lot of geopolitical tensions all over the place. So we know that going forward, the yen as one of a strong safe haven currency will be quite active. So what we're expecting a stronger yen and a weaker dollar, or depending on how you're looking at it, a weaker dollar. So I've got a position open at the 0.6 to shorten this pair, taking profit at the 0.25, so 101.25. that's where I'm going to take profit at. So yeah, let's just jump down to the daily, have a closer look, and we can see where we are. We've tested this support level here, and we know that we've closed previously below. This fits within my strategy of this pair breaking below the cloud here at 105 and heading to the lows. So hence why I've opened a position on this, and I've got my take profit up at the 111.53 level, 111.810. So I'm comfortable with this. I've got my position open on there. I've got my take profit at 101.180, but I can see it going lower than that. But hey, once that passed through 106.071, I've got my my break-even point will activate itself. So I'll be in a comfortable position then, not to worry of price action moving against me. We're expecting a stronger yen, a weaker dollar. So it's kind of just looking into where where you want to get in at. I've got in at the 106 level. And I've got my take profit is in there, my stop loss is in there as well. So there's nothing I need to worry about at the moment in regards to this pair. So we're just going to leave it on the weekly and move on to the next pair in our analysis, which is the GBP Yen. Now the GBP Yen is another pair that I'm looking at the moment. It is quite an interesting pair because, as I've said, where we are going with geopolitics and with the UK and the EU and the yen being a safe haven currency. So let's just jump straight to the weekly, have a closer look, and we can see that we know the trend is towards the downside. We've tested this level here, the 145 level, resistance level. We've pulled back down to the 126 level. We retraced our steps back up to the 133, and we've went up and tested the 137, and I can see we're kind of stuck at the moment at the 133. We're back down to the 133, and what this is telling me now, just looking at the weekly, I'm expecting this I'm expecting the 123 level to be tested and probably probably violated. So I will be looking to open a short position on this when my strategy is satisfied. So we just jump quickly to the daily and have a closer look. See, my strategy will be satisfied once we break below this cloud at the 130129 level, which, I mean, we're kind of on our way there. Looking at these candlesticks here and looking left, we can see that this itself is a level. It's functioning as a resistance level, the 135. So I'm quite confident that, you know, we're gonna break to the downside here. So I'm just gonna leave it there and wait for my strategy to be satisfied in terms of this currency pair, and then I'll be able to go in and open a short position on that. So we leave it on the weekly, keeping tabs on this and the fundamentals as well, and move on to our next pair. So on to the Euro Yen. We jump straight up to weekly, get a bigger picture first, as always, before we jump in. Now we can see, just looking at the weekly, we are testing a support level at the 120. I'm just looking left to 23 December 2012. That's a level, that was a good support level, respected there. Then we have that support level again in May 2016. I was tested and then it broke through, and we then had that level again tested and broke through in June 2019, and then we're here again testing that level at the 120. Now where we are with the fundamentals, there's a strong indicator that price action is gonna remain at this level, tested for the next few days or weeks, but the trend is towards the downside. So I will be expecting this with a level of certainty to test these lows again at the 112 to 110 lows. So these lows here, I'll be expecting price action to retrace down to the 110s. I mean, seeing where we are with the trend and seeing where we are with the cloud, this would be a good short. Well, this is a good short position pending. So let's just jump quickly down to the daily, have a closer look. We can see that, move the chart a little bit to the right, let's have a closer look. We can see that we're testing that resistance level. This is the support level here, support level. We can see that we're testing the support level here. So seeing what these candlesticks are, we've got divergence on the Chaikin, divergence on the RSI. Yeah, I mean, I will be expecting a retracement to these levels again on the daily, a retracement up to maybe the 122.121 level, then a pullback to the downside. So it's kind of pointless going in at this moment for short, because then you will have to have your stop loss above at the 127 level. But I will be expecting these highs here to be tested within the next few days. So at this level, putting a short position will be a good thing, but then also keeping in mind the fundamentals as well. So let's just jump up to the weekly, move the chart to the right. I always tend to leave my charts to the right and on the weekly, so when I do get back to it, I can have a quick snapshot of where I am overall and ascertain exactly where movements are before diving deeper into some details. So we know how we're gonna play this. We're expecting price action to test the highs again before pulling itself to the downside. So we are gonna leave it on a weekly, wait for that to happen, keep tabs on it, and move to the next pair in our analysis, which is the GBP Swiss. Now GBP Swiss on the weekly, move chart to the right, see where we are. We can see, strictly just looking at this pullback, we've created a flag, and we know that, you know, there's a high percentage of chance that the pullback is going to be, well, these lows here are going to be retested. So we know the trend is towards the downside. We see our divergence on the RSI on the weekly, and we can see where we are with the Chaikin just popping below that 0 level. So dive deeper to the daily chart, we got divergence, where we are with the fundamentals. We know that the pound isn't looking to get any stronger than the Swiss franc, well, not a 1.23 level strong. So this pair is just a wait to see a position opening for you to be able to go in and take advantage of price action. So I will, looking at this, I'm expecting this position to be retested, the 1.219, the 1.22 level to be retested, and then I'm seeing where we are with fundamentals, then the pullback. So again, on this pair, the overall goal is to short it. We need our strategy to be satisfied in order for us to take advantage of the price action here. So looking at the 4 hours, we can see, yeah, we expect range bound all the way here into the cloud before, we are moving to the downside. So I'm not going to go any lower than that. I'll jump back up to the weekly. We'll wait for a position to open up for me to go in and short this pair. So we'll leave it on the weekly, slide the chart to the right, and move on to our next pair in analysis, which is the USD Swiss. So on the USD Swiss, straight to the weekly, we can see on this pair we've been trading range bound since 2014 really. So the fundamentals are telling me now that there is going to be a downside to this pair, a stronger franc over the dollar. But then I know that the US election is coming up, and that normally have a significant influence on the currency pair, or on the base, which is the US dollar. So with this pair, it's just a simple approach I'm going to take to it. I'm just going to wait and see where price action will play between the 0.94 to the 0.92 level, because I'm expecting a pullback down to these levels here, these lows, the 0.92 lows. So let's just jump down to the daily to confirm that point. So daily, we move the chart to the far right, and we can see we got flag formation. We know that from flags always satisfy prediction in terms of the price action always move in the opposite direction. So we'll just jump up to the weekly, stroll the chart to the right, and leave it on the weekly, and move on to our next pair in our analysis, which is the Kiwi Dollar. So on the Kiwi Dollar, straight to the weekly, we'll move the chart to the right, get a closer look at this pair, and we can see the divergence on the RSI. We can see where we are with our checking volatility. We've popped below the zero there. Divergence here. We know where the US economy is. We also know where the Kiwi economy is in terms of the currency, the rate being maintained for now. So looking at this pair, we know the trend is towards the downside. We can see these levels here on the weekly. This level here, this level here, this level here. Let me just put in a quick trend line to just show you guys. So on the weekly, we can easily see where price action is going to be heading over the next few weeks, and we'll be expecting this level to be tested to satisfy the formation of that flag, but then we'll be expecting a pullback down to lows of 0.56, 0.57 lows. So let's just jump quickly down to the daily. See, our trend line is in there. I will expect this trend line to be tested, this area to be tested again. Divergence there on the daily to the downside, but I'll expect this to be tested, and then this is where you will open a short position on this pair, and be looking to take profit to the lows of 0.54, 0.55 lows. So in summary, for this pair, we are just gonna wait and see how price action plays around this level, around the 0.64, 0.65 level, and then make our decision on a short. But the overall view on this pair will be shorting it and looking to take profit below the 0.56, 0.55 level. But other than waiting and seeing how price action play towards this trend line, there's nothing else we can do but leave it on the weekly and move on to our next pair, which is the Aussie USD. So on the Aussie USD, we're on the weekly. Move the chart straight to the right to see where we are. We see we are currently testing a respected support level. So this support level goes back to 2005, October 2005, June 2005, all the way up to February 2019. We've tested the level here in October last year. We've tested our support level again this year. Now, just looking at this on the weekly, we'll be expecting that level to hold. But then again, keeping in mind where the fundamentals are with the US elections coming up. So that could we can easily see this level being violated, and a new support level, a new resistance level at the 0.77. But we just need to wait and see how that plays out. So I personally, looking at this from my experience of looking at this pair, I will expect this flag formation to be satisfied and price action break above the 0.71 level and head towards the next support level of the 0.75, seeing where we are with the fundamentals as we head into the US election this year. Well, later on this year, I think it's November. So let's just jump down to the daily quickly to have a look at price action. Move the chart a little bit to the right to get a bigger view, and we're kind of consolidated here, which is, I'm not surprised of where we are geopolitically, and with the whole COVID-19 global effect on economies around the world. So we are where we are with this pair consolidation. So as we head later on into the year, I would be expecting this level, this 0.70 level, to be tested and broken through, and I'll be expecting us to head north to the 0.75 level before we retrace back. But it is one of those pairs I don't really pay too much attention to, although I've got it in my top 11. At the moment, there are other pairs that are that I'm more focused on, that are more that have more opportunities coming up. But this, unfortunately, this is not one of those pairs. But Aussie USD, there's lots of opportunities on the Aussie USD. Whether or not we get a weaker or stronger dollar. So it is something to keep tabs on. But let's just move back up to the weekly and leave the chart on the weekly, and move on to our next and final pair in our analysis, which is gold dollar. So on gold dollar, we can see from our last analysis we've done a couple weeks ago, we had this circle in there saying that we're consolidated at this level, and we still have our horizontal line in there where we did do an analysis, and we predicted based on price action historically that we're going to be testing that 1780 mark. And look where we are with price action. We consolidated all the way through this point, and we broke above the 145 mark, and we are heading up to the 1780 mark. So guys, this is just this just proves to tell you that if we jump up to the highest time frame there, which is the monthly chart, we can see that's where we kind of look at inputting our horizontal line in, because that respected price, that level is respected as it was tested in 2012, 2011. See here, it was tested in 2012. Yeah, it was tested in 2012, and we looking left, we put in that horizontal line saying that we will be expecting that level again to be tested this time around, hence why we've had that in there. So lots of opportunities opened itself to be shorted. You can see divergence. We're back on the weekly. You can see divergence here, divergence here. There's a bunch of divergence, but we knew the fundamentals on the US dollar and gold and where we are in the current economical climate, the geopolitical climate, the the uncertainty in the world, so we didn't short on our position. And price action, based on our analysis, did retrace up to the 17. We're heading towards the 1780, and I honestly think we'll break above that 1780. We're going to be heading to the 1800s. Bring some, we haven't hit those highs in a while. Let's just jump back down to the monthly. Last time we at that highs was was about the formation of the financial crisis. We're up here with the 2011 2012 mark. So yeah guys, I mean, we know where we're heading with the gold USD, and how I'm going to play this will be, I will be expecting our horizontal line there to be tested, and if we do test that, we know we're heading to highs, new highs. So it will just be a matter of waiting for an opportunity to open itself to a retracement down to the lows, down to the downside. So let's just look at the weekly again. So once we hit our 1780 mark, which we're not far from at the moment, I think we've tested that mark this week. So once this is one of the pairs that I'm watching really closely, as well as the US dollar yen, the two pairs that I'm keeping a close eye on to short, because once we hit this 1780 level and we're heading, depending on what the closing of that candlestick, if it's a strong candlestick instead of a series of dojis, then we might need to move our horizontal line to above to the 1800s to 1810. It all depends on what this closing candlestick is, but we know that we're heading towards the US election. There's a lot of uncertainty in the market, so I will not be looking to short this position anytime soon. I'm not expecting the dollar to be stronger than gold, because a lot of gold is the reserve currency. It is the safe haven currency, so I'm not expecting gold to lose any value soon against the dollar, other than a retracement down to the next support level. So this will be our support level. The 1745, 1740, 1745 will be our next support level. So we will wait for a retracement down to this level, depending on where we are with the fundamentals, to put in a buy position, a long position, which will be, which will carry us hopefully towards November's election in the US, and the uncertainties that's currently happening in the world. But we will be looking to long this position, the gold dollar, because I'm not expecting dollar to be strong, to be able to rally against gold anytime soon. So it's on this currency pair, we were waiting to go in on the retracement down to the support level, long position. So we'll be looking to go into a long on this once we've had a retracement down to the support level, but then keeping a close eye on the geopolitical issues around the world and around the US and the US economy as well. Let's jump down to the monthly to have another quick look. So if that position does present itself and we retest the support level, we go in at lows, we'll be expecting 1850. We'll be expecting highs at 1850, which will be about 6,000 odd pips on gold dollar. But we just need to keep it on the weekly and keep close eye, keep jumping in between the weekly and the daily, and keep close eye on this price action as well as the fundamentals. All right guys, so there you have it. We've been through the 11 currency pairs that we trade. It's a midweek analysis. We decided on what we plan on doing on each pair and how we will approach a trade. A lot of the currencies that we did discuss, we're kind of just waiting for a setup to present itself. Amongst the currency pairs that we discussed, we are keeping close eye on two specific pairs which have a lot of opportunity to present itself. These pairs are the US dollar yen and the gold dollar, and maybe the other yen currency pairs like the GBP yen and the euro yen. I mean, this is something we'll continue to keep a close eye on and see how price action plays over the next few days, weeks, or a week, for us to be able to make sure that we profit on some of these as well. Alright guys, so there you have it, an analysis of the 11 currency pairs that I trade. I hope you enjoyed this video. Give it a thumbs up, and if you haven't hit that subscribe button, do hit that subscribe button so you can be made aware when I do release content. Do check out my channel, and I'll see you guys in the next video. One of my favorite indicators that I use in my trade, and I've used it for about 5-6 years now, so it's tried and tested, and I really do enjoy using it as part of my arsenal of other indicators, which is amongst the top 3 are this Ichimoku Kinkō Hyō indicator, the RSI indicators, and the Chaikin, and there are lots of other different indicators on other chart, but these 3 indicators on a chart gives me that that final level of analysis to go in and make a trade. So these are the only 3 indicators that I use on all my charts when I'm interested in making the decision on whether or not I should long or short that pair. Once my strategy has been satisfied and everything else dies. So the market psychology, the fundamentals, the technicals, which is what we're just talking about at the moment. And once everything comes together, I focus on these 3 indicators as well as the other components of my strategy to be able to go in and open a position. So one of the indicators that we're going to be talking about today is the Ichimoku Kinkō Hyō, also known as the Ichimoku indicator, or people refer to it as the Kumo cloud. This is the indicator. Now I'm not going to go through it, and I'm not going to give you a history lesson on the Ichimoku indicator, because there are tons of videos on YouTube on the history and what it's made of. It's made of 26-day moving average as well as the 52-day moving average, which are these 2 elements. I mean, there are specific details, tons of details on these indicators. What I'm going to talk about now is how I use it to trade. So we're going to look at it on a currency pair, and let's look at it on the Euro GBP, for example, and how I will use it as well as the other 2 indicators to make a decision on how I'm going to approach a trade, whether I'm going to open a short position or a long position. So let's just look at this on the weekly, because you guys know that whenever I click onto a currency chart, I go straight up to the weekly to make sure I'm looking at the big picture first before I dive down into detail. So it's kind of similar to you enter a battlefield. The first thing you want to do on the battlefield is to know exactly look at a map to see exactly where you are in relation to everything else around you. So that's kind of how I approach every chart. I want to see the biggest time period first to see what to get an overall view of the candlesticks, and then dive into the granular details. So we looking at the weekly on the Euro GBP, and we're looking at the Ichimoku indicator. So we know we've just put in our equidistant pricing channel here, but first thing I look at is the cloud to see which direction the cloud is flowing. So we know that the cloud kind of settles in this range as well, and that's telling me that obviously looking at the equidistant pricing channel, looking left, we know that we're trading within the range. But we see at the end of this candlestick, that's formation here on the weekly, it's like a doji forming on the weekly. We see the preceding cloud, which is being calculated to show a downside movement. So we'll be expecting a pullback into this cloud just looking at the weekly. Then as I've always said, we're looking at other indicators as well. It kind of confirms this on a weekly that we've got divergence here on the RSI. We've popped below the 0 mark on the Chaikin. So now just looking at this candlestick again, we can see that we're testing this resistance level here, and the cloud is kind of showing us that it's past the candlestick to the downside. We can see that the blue Kimo here shows a downside to this currency pair. So that is, just looking at this now, just give me an indicator that it's going to be a pullback on the weekly. So now we're seeing this and where we are with the overall picture, looking at the RSI, I will jump straight down to the daily to get a closer look. Now the daily is where I kind of make my decision my decision on, whether I'm going to open a position or not. And then if I am going to open a position, I will kind of make that confirmation on the daily, and then the 4 hours is where I will actually go in to make that trade. So on the daily now, I'm looking at the cloud. Let's move the chart to the right a little bit. I am looking at the cloud. I'm looking at the Tekken, the 26-day moving average, and the 52-day moving average, which are these two. I'm looking for the crossover as well. I see there's a crossover here in May. Will they move to the upside? Now I'm seeing we're in the cloud. We got dojis in the cloud. What this is telling me, that the cloud still span up to the 6th of July, the 7th of July. So I will be expecting a consolidation. This is telling me now there's going to be a consolidation here at this point till about 6th, 7th of July, keeping in mind the fundamentals, and I will be expecting a possible pullback. If we pop above the cloud, and we will then have a pullback. Because when we do pop above the cloud, which will be at this point somewhere here by the the 6th, 7th of July, I will be expecting these 26-day moving average and the 52-day moving average, the Tekken and the Kaiju, to have a crossover. So if they do crossover, which is what I'm expecting at this, like we have here, at this point, we're gonna open a short position. Well, it will be advisable to open a short position at that point. So I mean that's one of the ways I use it. I find it really helpful on higher time frames as well, to give you an overall view. And then if you jump down to the daily, it is quite effective in in combination with other elements as well. So I'm not saying that it is the best indicator to use by itself. No indicator will give you all the information you need, as accurate as it can get. You need to use it in combination with other indicators, with fundamentals, with market psychology as well. But I do find the Ichimoku Kinkō Hyō, the Ichimoku indicator, being one of the best indicators that I've used in all of my all of the years, the 6 years I've been trading. So that's one way to use it. Let's just look at it again on another currency pair. Let's look at it on the USD Yen. So on the USD Yen, on the weekly, let's just slide the chart to the right quickly to see how we're going to use the Ichimoku indicator. So on the weekly, we see the cloud formation is to the downside, and let's just jump down to the daily, where we need to make a decision. All right, so we have the downside here. We still have in the cloud here. We've had we've got a crossover here, and what that's telling me now is that a pullback is it's confirmed, and hence why I've opened a position on this pair. So we've got a crossover here at this point where the 26-day crosses the 52-day. We've got the cloud formation here. I mean, this is just I call this a fakie because of price action, historical price action. But I can see that with this crossover, we know that we're going to have a pullback down where we are, as well as the fundamentals and political situation, and the American election coming up soon. I mean, this just gives me a confirmation that price action is going to retrace down to these lows, these February lows here. So the cloud kind of, I mean, the Ichimoku just gives me, it kind of just paints it out for you, really, if you use it well in combination with other factors. This cloud here between the two blues, I call the red between blues, the rose between the sea. It is a very good confirmation of a pullback. It is, I mean, it one of those signs that you got a spot, and it kind of gives you a confirmation with your strategy. It gives you a confirmation on price action moving towards either the downside or upside, depending on what whether it's a rose between two C's or a C between two roses. However you want to look at it, that it tells you whether it's going to be a rally or a pullback. All right, guys. So I mean that's how I use this indicator as well as, you know, in conjunction with other indicators. That's how I use this indicator in my trading. I hope you find this video useful, and if you do have any questions, do drop it in the comment below. If you haven't hit that subscribe button, do hit that subscribe button so you can be made aware, you know, if I do release content. I've got an extensive playlist of content that I do release on a weekly basis. So give this video a thumbs up if you do like it, and I'll catch you guys in the next video. Cheers, bye bye.